All right, what's happening to the stock of Hain Celestial? A lot of you have been asking me. It's the king of natural and organic food space, host of brands you might recognize, including Celestial Seasonings, Earth's Best, Terra, Garden of Eden, the Greek God's Yogurt, many, many more, everything you find in my house. Here's a formerly high-flying stock, formerly taking the woodshed over the last few months, if not ground to pieces in the wood shop, chopper a la, Steve Buscemi and Fargo. I mean, I'm not kidding. We got to figure out what's going on here. Hain shares have plunged 42% from their all-time highs, above $70 in early August, down to 41 and change of today. What explains this kind of value destruction? Initially, Hain got slammed when it delivered a pretty solid quarter in August. It nevertheless failed to live up to Wall Street's inflated expectations. Then when Hain reported again less than 3 weeks ago, the company posted inline earnings, a little weaker than expected sales, but still increased by just 8.9% year over year. I'll take that. Even though management maintained their full-year guidance, the analysts were less than enthused about Hain's stagnating sales in the U.S., let alone the company's declining sales in the U.K., two largest markets, and that's why the stock tumbled $2 the next day. It's now down 14% since the results came out roughly 3 weeks ago. At these levels, Hain is only about $1 above its 52-week low. Stock's selling for just 17 times next year's earnings estimates, which means it's trading at a discount to so many of the boring, slow-growth, 1% to 2% growing packaged foods companies that Hain used to run circles around. Has the stock been punished too much? At what point do we acknowledge that the bar has been lowered and the expectations have come down to levels where they can be beaten? Let's check in with Irwin Simon, the founder, president, chairman, CEO of Hain Celestial, get to a better sense of where his company's headed. Mr. Simon, welcome back to Mad Money.
Hey, Jim, how are you?
Irwin, first of all, no one, as I said on air, no one was tougher about Hain than Hain itself. So, you guys, John Carroll in particular, I mean, he just said, listen, our shortfall was driven by, and then he lists natural channel and where you are in the store and the unprofitable baby and not butter. I mean, geez. It was relentless. You guys were down there giving yourselves the business.
So, hey, one of the things is this here, we're tough on ourselves. And, we put out great food. And, with what we put out there, you got to be tough on yourself. And what I said on the call, I have never seen the demand for natural organic food by more retailers out there, whether it's Walmart, Target, Whole Foods, etc. On the other hand, there's more competition. Yeah. But you know what? There's $800 billion of food sold in the U.S. every year. So there's a big market. And Hain is not going to change that market by itself. But on the other hand, there's 94 million millennials. Right. And let me tell you something. They are demanding clean labels, clean ingredients, and that's what Hain does. I've said it. We are the only company out there where 99% of our products are GMO-free. Over 40% of our products are organic. So there's a big focus.
You said it, but you also, again, I'm referencing your call.
Yep.
You said you're going to have to start spending to get the word out. Spending scares people.
You know what? Listen, spending, if we're going to grow that top line and we're going to get the sales for it. And let me tell you something.
Okay.
As you step back, and who is the biggest seller of organic foods today? Costco, right. Walmart. So there's
Amazon.
Listen, Amazon is one of my fastest growing customers. It's our biggest baby customer today. So with that, Jim, you have to invest back in your brands, and we'll continue to do that. And if you look at Hain, there was a couple of brands that didn't perform the way we wanted to. But you look at our personal care business, you look at our snack business. I talked about our protein business, and here it is Thanksgiving.
Protein's very strong.
Very strong. We'll sell 1.8 million turkeys this year at some good prices, and we're seeing some good volume growth. So with that, we're going to spend some money on our brands. On the other hand, if you look at our acquisitions and our integration, our SG&A, hey, we're taking costs out of this business. Hain's operating margins have been up almost every quarter. Our profits are up every quarter. Our top-line sales are growing high single digits, low double digits. So, we're delivering.
But you're talking about the perimeter of this, of even the natural and organic stores doing well, but not the center. And we know that Whole Foods is at 29. So people are starting to worry that maybe there is just this kind of stagnation. Even though you reel off the Walmarts and the Targets, people still associate you with Whole Foods.
Well, and let me tell you something, and I love being associated with Whole Foods. They're a great customer. They're a great partner. And consumers go there to find natural organic products first. And Whole Foods will get it together. We're seeing some great growth on our turkey business at Whole Foods. So it means consumers are going there shopping for Thanksgiving.
Year over year, because I've told you that we've done Whole Foods Thanksgiving for a couple years.
Right now, we're seeing almost 20% growth on our turkey business at Whole Foods year over year. So that's saying something.
That is very, very big.
So to come back and say,
let me just go over that again. You're saying year over year 20% for something that we actually kind of have every year.
And the other thing we're seeing is, in regards to size, 14 to 16 pounds, 16 to 18 pounds. So consumers are out there buying a lot bigger turkeys this year. But just to come back for a second, Jim, in regards to what you said.
Right.
Hain will
what you said that I'm reporting on.
What Hain will continue to invest back in its brands, and Hain will continue to expand distribution.
Okay.
And if I step back, is where the consumer is going, health and wellness. You've talked today in regards to acquisitions being done. Everybody wants to get into this category. We're diversified. Different categories, different brands, and around the world, too.
Okay, but now here you go. At one point, you talk about how Walmart, you lost these aisle caps, and now they're coming back. Yeah. What happened?
So, Walmart went to some new strategy on clean floor strategy.
Doug McMillon betrayed us?
Doug is trying and doing the right thing. And listen, he is focused on natural organic.
Because I like him. He is trying.
So do I.
You got to be a believer when he's trying.
Let me tell you something. His customers are asking for it, and there's a big focus on it there. And with that, hey, Hain will be there. Hain will replace a lot of other products out there that are in the stores today.
But here you go. You go into plant-based foods. That's white wave. So you're going head-to-head with some other guys.
But you know what? That's where you come back and look at Hain today. There's no other food company out there in the natural organic space that is diversified with us. Personal care, snacks, plant-based, meat-free, protein, groceries. If you look in Europe, what we're doing throughout Europe today, whether it's with Tesco, with Sainsbury, doing in India, doing in the Middle East. So yes.
All right, well, was this just like a quarter where things didn't break way, because remember, like I read through the quarter and I said, man, I'm too bullish. I'm too bullish.
Listen, again, maybe we're hard on ourselves. As you
are hard on yourselves.
We were up over 9%. Our operating income up over 9%, year over year. And we did not lower guidance. And, listen, you come back and look at it, our stock got beaten up and we did not lower guidance. So, I'm excited. And I got to tell you, healthy eating, not a fad, not a trend. It will continue to be a big part of the life. And just coming back at Thanksgiving, right. 1.8 million turkeys sold. Organic or antibiotic, organic and turkey sold. That's what the consumer wants today.
All right.
You just recently saw the World Health Organization come out and sort of said, hey, eating protein or eating deli with nitrates, with carcinogens, what it can cause.
Right.
And I got to tell you, how many retailers we've already got calls from and said, my deli business is down 40%. Can you get meat-free or can you get antibiotic deli in here? Because our deli business is down, and we got it.
All right. Look, I think the stock's overly punished, but I needed to hear it from you. That's Irwin Simon, founder, president, chairman, CEO of Hain Celestial. Happy Thanksgiving.
Happy Thanksgiving to you, Jim.
Excellent. Mad Money, be right back. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.